Hello and welcome to all viewers in my YouTube channel. Let's deep dive into the basics of the share market together. So let's get started. So what is share market? Now it's likely that everyone will assume that the activity of buying and selling company shares is termed as the share market. Correct? To make it even simple, what is market and what constitutes a market? For instance, assume there is a vegetable shop and imagine you decided to purchase 1 kg of tomato today. So you head to a vegetable shop to make your purchase, assuming the role of the buyer. The individual who is selling the tomatoes is known as the seller, and the venue where this transaction occurs is referred to as market. Essentially, the market serves as the interface or the bridging connections between the buyers and the sellers. So, share market is a term where it has various markets to it. The following are the share markets. First, equity or stocks. Second is the Forex market. Third is the crypto market. Fourth is futures and options. Fifth is commodities. So the first market is the equity or the stock market. What is the definition of this? So when you buy shares of a company stock, you become a shareholder, which means you own a portion of that company. Stock represents ownership in a company, and each country has its own stocks. For instance, in the US, we have Apple, Google, Nvidia, and for example, in Indian market, we have Reliance, Tata Motors, Infosys, HCLs, etc. The Indian stocks are controlled by SEBI, which I'll be covering in the upcoming slides. The second market is called the Forex market. What is the definition of the Forex market? The word Forex originating from the term foreign exchange. Forex is controlled by the European Union. The Forex market determines the day to day value or the exchange rate of most of the world's currencies, and it sees transactions worth 5 to 7 trillion dollars a day. Forex market operates 24 hours a day, 5 days a week, attracting high value transactions and global traders, leading to the significant trade volume and market momentum. So this is one of my favorite pair because there are global traders participating in this market. So some examples of forex currencies are USD, EUR, GBP. USD is for US dollars, GBP is for British pounds, INR is for Indian rupees. The third market is the crypto market. It operates on a blockchain technology and it is introduced with the aim of becoming a global currency for rapid transactions, sometimes completing transfers within seconds to minutes. Crypto operates 24 by 7 and it is not controlled by anyone. Let me explain you with an example. So assume you want to send money from India to your colleague who is in US and you initiate the transfer from your bank account which then forwards the request to the RBI. From the RBI, the request is being forwarded and transferred to the reputed bank in the US. From that reputed bank, the request is again forwarded to the local bank in the US and then the money gets transferred to your friend's account. So there are multiple hops in between and there is a delay in transferring money from one country to the other. But using cryptocurrencies, you can send money instantly and it is credited within seconds to minutes. Despite fluctuations, cryptocurrencies like BTC USD remain at their peak. People say crypto is illegal in India, but there are ways to trade in the crypto market with the regulated brokers approved by the Indian government. And the list of brokers I'll be covering in the upcoming videos. Major cryptocurrencies like Bitcoin, Ethereum, and Dogecoin thrive here with no centralized control. Hence, Crypto market is used to send money rapidly. The fourth market is called F&O, which is futures and options. This is a high risk and it requires high capital to trade. So in short, let me explain what is futures and options. I'll be covering a detailed video on this in my upcoming videos. So what is a future? A future is a contract to buy or sell an underlying stock or other assets at a predetermined price on a specific date. On the other hand, option contracts gives an opportunity to the investor the right but not the obligation to buy or sell the assets at a specific price on a specific date known as the expiry date. Don't worry, I'll cover this in detail in my upcoming videos. So the fifth market is the commodity market. The commodity market is a financial market where raw or primary products are traded. These products can be categorized into two main types. One is the hard commodities, one is the soft commodities. In the hard commodities, there are natural resources that are extracted or mined, such as gold, silver, crude oil, natural gas, copper, etc. All this falls under hard commodities. In the soft commodity, there are agriculture products such as wheat, corn, cotton candy, coffee, sugar, etc. So, the commodity market is a market where the raw or primary products are traded. For example, gold, silver, as I mentioned, in the hard commodities, and in the soft commodities like cotton, sugar, etc. So now it's crucial to understand who holds authority in the stock market. In India, it is SEBI, which is Security and Exchange Board of India. It is the regulatory body authorizing companies to list their stocks. SEBI ensures transparency by vetting project details and attracting investors. So assume any company which has to be listed in the Indian stock market has to be approved by the SEBI and it has to abide by all the laws listed by the SEBI. In SEBI, there are basically two types of exchanges. So the first exchange is the BSE, which is also called Bombay Stock Exchange. This is one of the oldest stock exchange in India and Asia, and it has more than 5,000 companies listed in it. Second, it is NSE, which is also called National Stock Exchange. This exchange is known for high value transactions and it is the preferred choice for most of the traders. It has more than 1,700 companies listed to it. Basically, in these two exchanges, NSE and BSE, there is something called benchmark index. What does index mean? Index is used to measure the performance of the stock or a specific segment. Index in the Indian market plays a crucial role in providing insights into the market trends. So there are multiple types of index in the Indian market. One, Nifty 50, BankNifty, Nifty Mid Cap, Nifty Small Cap, Sensex, FinNifty, etc. So what is Nifty 50 or Nifty? It comprises 50 of the largest and most liquid stocks listed on the NSE, representing the diverse sectors of the Indian economy and driving the Indian economy. For example, companies like Reliance, HCL, Infosys, Adani Groups, etc. On the other hand, we have Bank Nifty. So Bank Nifty consists of most liquid and large cap banking stocks listed on the NSE. It reflects the performance of the banking sector in India. For example, HDFC, ICICI Bank, etc. The third is the Nifty Midcap 100. Nifty Midcap 100 represents the performance of the midcap stocks listed on the National Stock Exchange. For example, Aditya Birla, Bell, etc. Nifty 100. The small cap 100 represents the performance of the small cap stocks listed on the NSEs. For example, Suzlon, Birlasoft, IOB, IDFC, etc. I trust that this video has helped you in understanding the basics of the stock market, and I'm grateful for this opportunity to share my knowledge with you all. If you found this video helpful, please consider subscribing, sharing, and spreading the message. Trade with knowledge to your friends. Thank you.